Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool Inside Value, Joe Magyer, and from $1 Million Portfolio, Charly, Travers, and Ron Gross. Gentlemen, good to see you as always.
Howdy.
How are you doing, Chris?
We've got Warren Buffett's latest deal. We've got Jose Cuervo being left at the altar. And we've got Carl Quintanilla from CNBC with a look ahead to 2013. Plus, as always, we got a few stocks on our radar. But we begin this week with two tech giants, Google and Apple. 3 months ago, Apple unveiled the iPhone 6 with its own mapping feature. And guys, I think it's fair to say that that was a bit of a debacle.
Fair.
This week, the Google Maps app returned to the iPhone. Ron Gross, I turn to you first. What do you make of this?
It's back, most downloaded free app, and people are loving it. There's some great improvements to it, actually. Got the turn-by-turn audible navigation, the street views there. It's a big mess up by Apple. I kind of want to get over it, though. You screw up, you correct it. That's what they did. Let's hope that it's not a pattern of additional screw-ups down the road. Apple benefits by having great apps. Google makes great apps in this particular case, so that's a win there. And we move on.
Joe, I get
It's a very nice silver lining case.
I was just going to say, this seems...
It's the holiday season, Joe.
I know that maybe this shouldn't matter, but it seems like, from a reputation standpoint, this is borderline humiliating for Apple.
Yeah, it's a big embarrassment, and it's always bad when your biggest rival sweeps in kind of on a chariot.
We'll save the day.
Yeah, and we're saving the day with this awesome Maps platform. You know, this isn't a huge game changer, but it is an embarrassment, a black eye for Apple, and there are people who... upon this, coming across this whole episode, we'll look and say, well, maybe I should be looking harder at an Android phone next time around because it seems like they've got their stuff together.
Charlie, when you look at this whole episode, what do you do if you're Apple? Do you just give up on Maps now, or do you go back to the drawing board and try and retool?
I think they've sunk so much time and effort and money into making their own maps that if they can get it up to par with Google Maps because they are arch enemies, they'd love to kick them off the platform. But I think they tried to do that a little too prematurely.
And it still comes pre-installed, so the Apple Maps will get plenty of play here. We just hope that it's good and they don't continue to get criticism for it. In general, I think the last 6 months has created a tremendous opportunity for shareholders who have never bought Apple or would like to buy Apple now to get in, down 27% from its high. I didn't even think its high was actually that exorbitant. 12 PE right here at this current price for a company that is I think one of the finest technology consumer products companies out there. So I think it's a great opportunity to get in.
Joe, what do you think when you look at Google and Apple from a valuation standpoint? To Ron's point, Apple's a lot cheaper today than it was a few months ago.
Yeah, I like it 27% better than I did a few months ago, but I still think they're going to face a lot of headwinds in terms of tighter margins and more competition from Google and Samsung.
So you love Apple at this price?
I'm not a huge fan.
The changes continue at Yahoo. 2 board members have resigned effective immediately, and joining the board is Max Levchin. Charlie, he is the co-founder of PayPal. He is the chairman of the board over at Yelp. What does this move tell you about Yahoo and Marissa Mayer, the relatively new CEO?
Well, Chris, I think this finally can bring some of the stability that I was saying Yahoo needed all along with all the CEO turnover, the board disruptions. And Max Levchin has quite the pedigree. I think he'll be a great asset for Yahoo. He was previously a VP of engineering at Google, a co-founder of PayPal, a company you might have heard of, and the first investor of Yelp. And he's also a director at Evernote, which is a very popular program. I think he brings a lot of real-world experience in areas that Yahoo is looking to get it. Yahoo wants to have very personal experiences with 500 million users around the world. They have that active user base across Yahoo Finance, Yahoo News. They have some tremendous properties and how to get the data out of it that all those people are giving them. A guy like Max can really bring them some expertise in that area. So I think this is a great move for them.
Joe, when I hear things like, well, this guy's the co-founder of PayPal, and he has...
Look, a lot of people co-founded PayPal. But Reid Hoffman, Peter Thiel, everybody gets credit for that.
But also his standing at Yelp. Does this pave the way to, if not some sort of merger with Yahoo, at least tighter relationships between an eBay and a Yelp along with Yahoo?
I'm not so sure about where eBay fits into that, but I agree that Max was a great addition. And Max, if you're listening and you want to join another board of directors, I'm
What are
sure
the odds that he's listening?
I think I speak on behalf of Tom Gardner here. We'd be happy to take you. Yeah, I think there could be more, collaboration there between Yelp and Yahoo as a result, and definitely anything that would bolster Yahoo's search results as they eventually wean off of working with Bing, which might happen. I don't know. That could happen. But I think if they did want to take more control of their own destiny on search, Yelp would be a good person for them to partner up with.
I think it's so interesting how a good CEO can kind of change perception almost overnight. If you had asked me 6 months ago, I would have said Yahoo is probably not going to be a standalone company. Pick a time, year or two from now. Now I'm not so sure. I think they can actually turn this around and make a go of it. As long as they got to do a bunch of right things, but it seems much more likely now, and that's 6 months, and it's really interesting to me.
Charlie, to that point, Marissa Mayer has been CEO for about 5 months. The stock is up around 25% in that time. When you look at shares of Yahoo, what do you think of them in terms of how they're priced right now?
She's killing it. No, I think this. I agree with Ron. I think it's a better buy today at a higher price than it might have been 6 months ago when nobody wanted to touch it.
Berkshire Hathaway announced it has bought back $1.2 billion worth of its own stock, and shares were up this week on the news. Joe, we've talked in the recent past about Warren Buffett and his elephant gun and how he wanted to go out and use it, and it looks like
he's turned it on himself.
Turned it on himself. What do you think of this?
Well, it's not a huge buyback in Berkshire terms. It's only about 0.5 percentage point of the market cap, but I think the real story is that he raised the price at which he'd be willing to buy back Berkshire shares from a 10% premium to book value to a 20%. That's about where the stock is selling today. And honestly, I think Berkshire's a great buy here. I mean, basically, there's very little downside risk because the stock isn't likely to fall below the price that Buffett's willing to buy back at and has bought back at. And you have the upside of both growth in book value per share and some sort of mean reversion on the stock kind of coasting up to a price that better reflects what I think is Berkshire's long-term earnings power. And so, it's a nice little mix. It's hard to go wrong owning Berkshire at this price.
Ron, I know that not every company, or probably most companies, don't have the balance sheet that Berkshire Hathaway does in terms of cash. But it seems like this basic framework that Buffett and the board of directors set up in terms of when they're going to buy back stock, basically placing it in that relatively tight range, that seems like a pretty successful blueprint that at least some other companies could follow. Yes? Or do you think they're just going to continue to just do a scattershot approach and buy whenever they feel like it?
Yeah, I think scattershot. But from a shareholder perspective or an analyst perspective, it's great to see. Buffett forever has said book value is the best way to look at his company. And then to look at his stock based on a multiple of book value makes perfect sense. And for him to come out and say, listen, here's where we're buyers. Most companies don't do that. They're much more secretive, and that speaks to kind of the Buffett transparency and all the great things that we like about him.
Joe, you still like the stock even with the bump up this week?
Yeah, absolutely. It's my biggest holding by a factor of 4 or 5.
Okay, so a good week for you.
Yes.
Yeah.
What stocks were investors searching for in 2012? Google's list of the most searched for stocks is out, and a couple of the names on the list will surprise you. Stay right here. You're listening to Motley Fool Money. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. Welcome back to Motley Fool Money. Chris Hill here in studio with Joe Magyer, Charly, Travers, and Ron Gross. Guys, Costco's first quarter profit rose 30%. Same-store sales up 7%. Ron, it all looks good to me. Why is the stock down this week?
Well, first, the 30% is a little misleading. That's the headline number. After you adjust for some one-time things that happened last year, it's actually 19%, so still pretty darn good. Not as good as 30. The membership numbers up 14%. Membership revenues. Some analysts were looking for something a little bit more than that.
Yep.
So the expectations game. But I think it's mostly about at $99, $98, wherever the stock is. It's kind of all the goodness is priced in there already. all the future growth, all the stores that are going to come in the future, kind of already baked into that price. So something really stellar is going to have to happen to really pop that stock.
Two questions I want to follow up on. One is the same-store sales numbers, up 7% for a company that's been around as long as Costco. That seems like a really strong number, or is that just merely good and not exceptional?
No, I think it is really good. They're so focused on that value proposition they offer, and quite frankly, it's not only because they're great people, it's because they want you to renew and continue to pay that annual membership fee, which represents about 80% of their operating profit. But it's a great place to shop, and the value proposition is there.
Last thing, when you look at the locations they have, about 450 in the United States. We talked recently about Starbucks and their somewhat aggressive move towards opening literally thousands of more locations. Is there an opportunity there for Costco, not necessarily to double their store count, but it seems like they could be a little bit less conservative with that?
Yeah, they have a goal of 1,000 stores, up from about 620 now.
Is that worldwide or U.S.?
Worldwide.
Okay.
So, they have 32 in Mexico now. They have a presence in Japan and Taiwan and Korea, only a few stores in Australia. So there is plenty of expansion potential, but not for an actual doubling, but maybe another 400 or so.
Diageo produces and distributes some of the biggest and best-known brands in the beverage industry, including Johnnie Walker Scotch, Smirnoff Vodka. But the company has walked away from negotiations to continue distributing Jose Cuervo Tequila. And Joe, when you consider that in the last fiscal year, that did it close to $500 million in sales, I don't know, is this a smart move by Diageo, or are they walking away from money on the table?
It is if they walked away at the right price, and these guys have bid aggressively in the past, so I'm assuming the ask was very, very expensive for them to walk away because it leaves a hole in their lineup. They don't really have a strong tequila presence. Now, the big win here is for Jim Beam, which does have a good tequila presence with Sauza, and just kind of bolsters this case that eventually Diageo is going to acquire Beam, because Beam also has a couple great bourbon brands, which I think we're familiar with. Obviously, Jim Beam, but Maker's Mark as well, which is a huge brand. And, all three of those would fit very nicely into Diageo, fill gaps in their product lineup, and be able to help Diageo, with its superior scale and reach, kind of lever those brands up a little bit.
When you look at how Diageo has in the past attempted to buy Jose Cuervo outright, you got some people, some analysts saying, look, this is really just the latest tactic in their move, that they're still going to pursue that. Do you think that's the case, or do you think that they're walking away and now they only have eyes for Beam and it's Cuervo or it's tequila lineup?
I would believe it's tactical. I mean, they're obviously smart guys and they want to play hardball, and I've seen these guys at analyst days, and they definitely mean business. This is not a cuddly group of managers. So they're going to do any tactic they can to get a good price.
The stock is trading near an all-time high. What do you think of it?
It's pretty expensive. I mean, it's a wonderful business, but they got a lot of debt on there, and I'd hold out for a better price.
This week, Google published its annual Zeitgeist report of the top trending and most searched queries in 2012. That include the top 10 most Googled stocks of the year. Charlie, not a big surprise when you look at the top few stocks: Facebook, Zynga, Yelp, Samsung. Number 5 was Arena Pharmaceuticals. I guess my first question is, what in the world is Arena Pharmaceuticals? I've never even heard of this.
Sure, Chris. And every year, one of the hundreds of biotechs developing a drug actually gets one out through FDA approval and hits a home run. And what Arena did is they got the first weight loss drug approved by the FDA in 13 years with Belvic. It's to be used in combination with restricted calorie diet and exercise. There's some body mass index limitations as well, so the FDA was being pretty strict with it, but they did put it on the market. And as a result, their stock is up almost 400% this year. That tends to capture the attention of people who want some high-flying growth companies, and Arena was the stock for that this year.
Rounding out the top 10, Kodak, Google, Electronic Arts, Vivis, and SuperValue. Am I the only one surprised that Apple isn't on this list?
Yeah, it is surprising.
With the new gadgets?
Maybe the gadget names themselves are big, but not the name Apple itself.
It could just be that Apple is so blasted in our face in headlines already that you don't need to look it up.
All right, let's wrap up with the stocks that are on our radar. We will bring in our man Steve Broido in from the other side of the glass with a question, just to keep you honest and frankly, and I'm looking straight at you, Ron, frankly, to see if you've actually done your homework. So, Ron Gross, what is your stock
I have a history with this company back in my investment banking days. It's Comtech Telecommunications, CMTL, small cap company. They make communication systems and satellites. largely for the government. About 50% of sales come from the U.S. government, which is both good and bad. But it looks real cheap here at 4 times EBITDA. I think it's worth a look.
Steve, question for Ron?
How easy is it to launch a satellite?
It is both very difficult and very expensive, as even a non-military application like a Sirius satellite will tell you. You got to have the balance sheet to do something like that.
Is there a limitation to the number of satellites? It seems like we probably have quite a few up there in orbit.
I don't know the exact answer to that, but I would imagine if it gets kind of crowded out there, they could start bumping into each other.
And what's the regulation there? Like, if I'm just some eccentric billionaire and I just decide in my backyard I'm going to build and launch one of these things, can I just do that? It seems like
now I'm a legal expert.
You're an
on
expert on space
on
law.
satellite telephony.
No, it just seems like it seems like the type of thing that you would need some sort of governmental approval on.
I think to put things into asynchronous orbit must require a sign-off from someone.
Like a $50 permit.
Yeah, something like that.
Charlie, Travers, your stock?
I'm very bullish on Burger King, Chris. They recently went back public this year, spending a lot of money to reimage their stores. They've changed up their menu to make it more appealing. They've changed the marketing to get rid of the king and get a broader appeal.
I think we're all in favor of that.
Yes. And they have some significant international expansion ahead of them. They only have 12,000 stores now compared to over 30,000 worldwide for McDonald's. The stock is at 17. I think it could be worth at least $25.
Steve, question about Burger King?
Minus McDonald's, if it could knock out one of its competitors, who would it be?
I think they'd take out Wendy's.
Joe, your stock?
McDonald's, actually. Yeah, I agree with everything Charlie said about Burger King.
Wait a minute,
really
McDonald's is your stock?
Yeah, it is.
Okay.
It is total coincidence. I agree that Burger King has a lot going for it. The way that I actually backed into McDonald's was because I was looking so hard at Burger King. But at every turn, I just kept coming around to the idea that McDonald's had some structural advantages in terms of the locations of their stores, just general higher sales and marketing budgets, distribution.
But they don't have sweet potato fries.
They don't, but I'm sure they could innovate around
Isn't that really what's most important?
They do have sweet tea.
They do. And I like Burger King, too. What I like about McDonald's is the stock. I think Burger King's valuation reflects a lot of that turnaround potential. I don't think that's the case with McDonald's. Last month or 2 months ago, they had their first drop in same-store sales in about a decade, and everyone got up in arms about it. I didn't think it was as big a deal as everyone thought it was, and this past month they turned around, and lo and behold, it's still a growing company. I think it's a nice price, and it's an excellent franchise.
Steve, question about McDonald's?
Buy, sell, or hold the Shamrock Shake.
I'm not really familiar with that, but I'll buy it.
You know what? I'm going to sell it because I have personal experience. Because back in the day when I was a kid, I loved the limited edition mint Shamrock Shake. And here's what they did, Steve. They up and changed it. They tried to innovate, just like the Girl Scouts try to innovate with cookies every year. They changed the recipe of the Shamrock Shake. I had one. It was terrible. So I'm a sell. I'm just a strong sell.
It's always look gross to me.
Hey.
They used to be awesome.
Watch it.
Cutting a little close with Ron over there. All right. Joe Magyer, Charlie Travers, Ron Gross. Guys, thanks for being here.
Thank you.